Thanks and good afternoon. I do apologize that we're a little bit late off the starting block this morning, but I'm delighted you have stayed on to join us. And so it's a good afternoon and welcome to Unlock the Stock. And we're pleased to welcome for the first time to this platform, Lesaka Technologies. And as you know, this platform is specifically designed for investors to gain access to corporate management and to get to know them and their companies better. Unlock the Stock is only possible with our technology partner, Lumi Global, and please visit their website, lumiglobal.com, to learn more about Lumi's various online and AGM investor presentation solutions. Our hosts, as always, today will be the finance ghost and Mark Tobin from Coffee Microcaps, and they'll be facilitating the Q&A session. This event is sponsored by A2X, a stock exchange that plays an integral part in the progression of South Africa's financial markets. It's the second largest stock exchange in Africa as measured by market cap, with 182 securities listed on the platform, including 30 of the top 40 stocks, with a combined market cap, of 9 trillion rand. The team at A2X is proud to be partnering with Unlock the Stock. Just as this platform unlocks value through its insights and analysis, so too does A2X unlock value. So too does A2X unlock value for the stocks listed on its platform, and so help drive the market forward. We'd like to welcome today CEO Chris Meyer to our platform. Welcome, Chris, and Chris is joining us from London, so we do appreciate making the time for us today. So Chris will firstly just take you through his presentation. And this event is being recorded, by the way, for our Unlock the Stock YouTube channel, and it will be available on that channel soon. Please send your questions to the Finance Ghost and Mark Tobin via the chat function when we get into the Q&A session. And then you will see an email address when we begin the Q&A. If you'd like to be added to the Lesaka's distribution list, then please send an email to that address. Chris, enough from me now. So if you could just share your screen, or I think Jonathan will be doing it from Lumi. So Jonathan, if you could share that screen and we can crack on with the presentation. Thanks.
Thank you, Deborah. And hopefully you can hear me. Thank you very much for inviting me onto the show. It's a pleasure to be here. I actually just arrived in London this morning, flew in from Joburg. So just still finding my feet on the ground here, but it's great to be on the show, and thanks very much. So as Deborah said, I've got a quick presentation that I'll take everyone through, and then for me the best part will hopefully be some Q&A and some dialogue with the Finance Ghost and with Mark. So I'm going to use a presentation that's a bit of a blend of a high-level overview of Lesaka, coupled with some of the highlights from our financial year-end presentation, which we delivered last month. Our year-end is June, but our financial results were released in September. So just to start, we could just move forward onto slide 3, Jonathan, just through that disclaimer. So yeah, I'm Chris Meyer. I'm the Group CEO of Lesaka. I've been with Lesaka since the turnaround journey began just over 2 years ago. Before that, I spent most of my career actually with Investec. I ran the corporate and investment bank for Investec in the UK for 10 years, but nearly 20 years with Investec. So as South African, who spent a lot of time outside of South Africa building businesses and trying to compete in some of the global markets. Lesaka is NASDAQ and JSE listed. We've got a market cap of around 4.7 billion rand. Just to give you a sense of size and scale. Revenue last year to June 23, 9.5 billion, just to give you some quick highlights. If we just move on to slide 5, I think the key points for me to highlight here really are we are transforming Lesaka into Southern Africa's leading dual-sided merchant and consumer fintech ecosystem, which is powered by proprietary technology and underpinned by a high-touch partnership-based distribution model. The acquisition of the Connect Group, which closed last year in April, is the foundation of our merchant division, and gives us a highly differentiated offering with a proven and profitable business model, where we're serving more than 80,000 small and micro merchants, and many of whom are in the informal sector in South Africa. Along with that, the transformation of the Lesaka consumer business gives us a powerful consumer platform, which offers lending, insurance, and banking products to approximately 1.3 million consumers in South Africa. And we're an experienced management team. We have a demonstrated track record in scaling businesses in the financial and technology space. As I said, we reported revenues for the financial year to June 23 of 9.4 billion rand, and we also reported a group adjusted EBITDA for the year of 498 million rand. And importantly, are now in a position where we are delivering positive cash from business operations at a group level, which speaks to the turnaround process that we've been on. To move on to the next slide, where we just talk a little bit about our mission and our vision. So our vision is really to build the leading fintech, providing cash and digital solutions to small merchants and consumers in Southern Africa. And what is clear to us is that there is no fintech ecosystem in South Africa akin to the likes of PagSeguro or Fari, PagSeguro in Brazil or Fari in Egypt, despite South Africa displaying many of the same characteristics as those markets in Brazil and Egypt. As we all know, South Africa is still a highly cash-based economy, and many merchants in the informal sector suffer from a lack of access to financial services and to the digital economy. And they operate in a highly cash-oriented environment. And similarly, we know I think almost half of the South African population are considered to be in LSMs 1 to 6, which are the lowest income brackets. And many people in these income brackets are reliant on social grants, and are also highly cash dependent and suffer from a lack of access to affordable financial services. And so our mission is very clear. We enable merchants to compete and grow, and we are improving the lives of South Africa's grant beneficiaries, both by providing innovative financial technology and value-creating solutions which are focused on cash and digitalization, serving the needs of both, but also recognizing and supporting the secular shift towards digital that is taking place. And we're just 2 years into this journey. And as I said, I joined in July 21, but the take was immediate and clear. We needed to fix the consumer business, which was significantly loss-making, and at the same time integrate the Connect Group into our merchant business. And the opportunities and the synergies that this presents for us are tremendously exciting. So moving on, slide 7, and talking a little bit about our comparables and our competitors. So when you think of Lesaka, think of a dual-sided merchant and consumer platform in other parts of the world. I mentioned PagSeguro in Brazil, Fari in Egypt. These dual-sided platforms have been very successful in these other geographies, and it is what we are trying to replicate in South Africa. From a competitive perspective, here in SA, there are numerous fintech competitors in aspects of what we offer, but we feel there's no one that has a complete service offering or a wide service offering such as ours. If you look in the merchant space into the informal sector, for example, you might see the likes of Shop to Shop in card acquiring, or Flash in VAS, or in the formal space, the banks compete with us in the vaulting business. But we don't see a competitor across all 4 aspects of our proposition. Equally in the consumer business, obviously we have the traditional banks, very entrenched and largely dominant in the South African market. But for us, they provide a limited offering to the grant beneficiary space in particular, and that is where we focus with a full service offering into the grant beneficiary space. The larger banks, as I say, have a more limited offering, and we can unpack that. So we feel we stand apart as a fintech ecosystem for merchants and consumers in the informal markets and the lower income groups. So talk a little bit about our market opportunity, which is on moving forward onto slide 8, and actually move on to slide 9. So as we all know, there are real challenges to delivering financial inclusion and digitalization in the South African market. Historically, we know there's a deep distrust and a lack of understanding of cash alternatives, and that's been driven by low levels of financial literacy, and taken with the relatively high connectivity costs in South Africa. Airtime is an expensive and a prized commodity. Also, the low smartphone penetration, where we believe almost half of South Africans still use old-style feature phones. And it also means that although almost 90% of South Africans have a bank account, a significant majority, particularly in the grant space, still treat those bank accounts as a post box almost, withdrawing their money in one transaction and operating in the cash environment. Moving on to the following slide, what this really means for our merchants is that less than 8% of merchants in South Africa have access to formal credit, and less than 4% of the informal merchants actually can accept digital payments at this point. And this means that we think almost 60% of total transactions in South Africa are still in cash. And in the informal MSME market and the consumer space that we operate in, we think that number is closer to 90% still being cash-based. Slide 11, when we think about what it means for our consumers, only 20% of South Africans, we understand, have access to credit and savings, a very low penetration in our market segment. And 40% of the lower LSMs actually have access to insurance. And as I said, we believe that 90% of the 12 million permanent grant recipients still require immediate access to cash, in terms of the withdrawal of their grant every month. Moving on to slide 12, which we'll talk a little bit about the Lesaka platform. And maybe skip forward. Yeah, the Lesaka platform really serves micro and small merchants together with the consumers who typically shop in their stores. That's a simple way to think about it. In our merchant business, we serve approximately 80,000 micro and small businesses, and our offering covers cash digitalization, card acquiring payments, merchant credit, VAS, value-added services, bill and supplier payments. And then in our consumer business, we are serving approximately 1.3 million active customers with an offering that covers banking, credit, and insurance. And it's important to emphasize active. These are customers that we're seeing a cash flow through their bank account every month, as opposed to having an account that might not be active. The important thing is our merchants and our consumers operate in the same space. And that gives us the opportunity to create a mutually reinforcing business model that incentivizes and rewards both the merchant and the consumer for operating in our ecosystem. That's the vision that we want to work towards here. In slide 14, I just want to unpack a little bit of our addressable market. So firstly, on the merchant side, we divide the TAM into the target addressable market into the informal and the formal. And as we said, the informal sector is large, and it is largely cash-based and not well understood, very hard to size. Well-known township economy commentator G.G. Alcock, who we work with closely, estimates that there's somewhere over 1 million informal merchants in South Africa, and we see GG as probably the authority in terms of sizing the market with the most reliable data at hand. And with our current service offering through our Kazang brand, we estimate that our serviceable market in the informal economy is probably around 400,000 of those merchants. And they're primarily in the FMCG and the tavern sector, so the spazas and the taverns or shebeens in South Africa, which gives us probably around an 18% market share, just to give you a sense. And as I said, this is a highly cash-driven market, and it's largely unpenetrated by the banks, and we feel it's ripe for fintech innovation. On the formal side, in the merchant space, we estimate probably around 700,000 merchants to be in our total addressable market, and we currently serve just over 6,900 merchants, primarily by having one of our smart vaults in their stores. The formal market is more competitive, as we know, but our leading cash digitalization offering, which essentially places the bank in the merchant store, means we are highly embedded in their business, and as a result, we are very well placed to grow our offering through innovating and solving pain points. An example of that would be our Capital Connect product, where we provide credit to access to credit to these merchants. On the consumer side, out of that lower LSM category, there are approximately 12 million permanent grant recipients and a further 7.5 million temporary grant recipients, or SRD grant recipients, the Special Relief of Distress grant that was introduced as part of COVID. And our key focus is on the permanent grant recipients, where we are able to offer our full suite of services. We do serve the temporary SRD recipients as well, but we provide a more limited offering there. And that's really because there's a predictability or a permanence around the permanent grant space, where the majority are receiving either a child support grant or an old age grant, and there's as I say, a predictability to that, which allows us to build a clearer picture around our customer base. Over 1.1 million of our customers are permanent grant recipients, which implies we've got just under 10% market share there. And our strategy is to build our ecosystem where our consumers are. And that often means in the townships and the rural areas of South Africa, creating points of presence that are convenient and accessible for our customers. And as such, across merchant and consumer, we have over 82,500 points of presence in the form of branches, retailer pay points, ATMs, satellite kiosks, etc. Just to move on to some KPIs quickly, on slide 15, I'll give you a few KPIs on our merchant business to start. So, as I said, we have a comprehensive offering into the SME space. In our merchant card acquiring business, we have approximately 45,000 card-enabled POS devices, which increased just over 98%, just under 100% in the year to FY23 Q4. So we're seeing very strong growth there in the informal sector. In our VAS business, we have significantly grown our merchant base from around 35,000 merchants in February 2020 to approximately 44,000 by February 22, and we're at 75,000 merchants as at the end of June 2023. So that's a compound annual growth rate over 3 years of around 27%, I think. And the number of devices and the throughput per device are the key revenue drivers in our merchant business. Just to note, we processed 26.7 billion rand of value-added services in throughput in financial year 23, which is 30% up year on year. On slide 16, quickly, so our offering also includes providing quick access to working capital, and we've seen good growth there. We dispersed 262 million in the last quarter. And also we have, as I said, 4,400 cash vaults that collectively process over 110 billion rand per annum of cash through those vaults for our customers. Slide 17, there are a few KPIs there to touch on for our consumer business. We have approximately, as I said, 1.3 million active EPE account holders. We have a loan book of circa 415 million rand, and we have over 335,000 policy holders in our funeral policy business. And our active EPE customer base has grown 10% year on year, and we have seen about a 19% growth in our loan book over that period. And at the same time, we've managed to grow our insurance penetration in our customer base from 18% to around 30% over that time, which has really driven the ARPU, you can see on the bottom of that slide, from 70 rand per customer per month to around 80 rand in Q4 FY23. So we've seen good momentum there. On slide 18, really just to illustrate, I won't spend a lot of time here, but we delivered the third consecutive quarter of profitability in the consumer division in our Q4. We feel we've executed on the turnaround strategy there and are now moving strongly onto the front foot. We have fundamentally transformed the consumer division into a customer-oriented, sales-focused business. And we know we still have work to do, but we feel we're firmly on the right foot. I'll move into some numbers briefly before we conclude. Slide 20. So the revenue growth that we reported in Q4 has primarily been driven by the inclusion of the Connect Group, which came in during the second half of Q4 2022. So in FY23, we've also seen a 768 million rand improvement in our group adjusted EBITDA year on year, going from a loss of 268 million in FY22 to a group adjusted EBITDA profit of 498 million in FY23. And that's driven, as I said, by the Connect Group performance and the turnaround in our consumer book. I'm going to move forward in the interest of time, Jonathan, to slide 23, just to talk a little bit about cash, and then I'll talk about outlook and we can pause. Hopefully, I feel I'm probably running over slightly. I think it's important to point out that in FY23 Q4, we delivered 183 million of cash generated from operating activities, and that compares to 104 million cash utilized negative in FY22 Q4, so in the prior year, fourth quarter. And that again, to demonstrate the turnaround in the performance of our business. And we are now, if you look at the last 3 quarters, we are generating a positive cash flow after funding our loan book and our working capital movements. I'm looking at that 64 million rand in Q4 of net cash generated from operations after loan book funding. A big focus for us is our net debt to EBITDA ratio. We took on debt in the acquisition of the Connect Group. We calculate the ratio by annualizing the relevant quarter's group adjusted EBITDA, and we see that has improved to 3.2 times in the current quarter. And our focus and what we'd like to see is to get that down to around 2.5 times during the course of FY24. And also just to highlight, it's probably important to highlight, we have non-core assets on our balance sheet to the value of circa 1.5 billion rand, which we will look to exit as opportunities arise. And I can talk to those if we have some time. And then finally, just outlook for the year ahead, which is on slide 24. We've given the market guidance for our year of revenue of between 10.7 and 11.7 billion rand, which would be a growth rate of between 14 and 24% on FY23. And we've also talked about EBITDA of between 680 to 740 million for the year, which would imply a 37 to 49% growth rate year on year. And I'm going to pause there. Maybe we can go on to the last slide, which is just the conclusions. But I realize I'm probably slightly over time, so I'm going to hand back to you, Deborah.
Thanks so much, Chris. And I'm sure that everybody that's attending today's session will agree that there were some fairly fascinating statistics in that presentation. So thanks very much for sharing.
Pleasure.
And now that I'm over my little stumbly bumblies this morning, or this afternoon, shall I say, we're now going into the Q&A session. So I'm going to hand over to the finance ghost and to Mark Tobin.
Thank you, Deborah. Thank you, Chris. Really, really interesting and so nice to have you guys on the platform. Obviously, to attendees, just send your questions through in the chat, please. You can send them to me. If you support Ireland, you can send them to Mark. Have to bring some rugby into this. Chris, I almost wanted to start off by asking who you're supporting, but I'm sure the answer is the Springboks, despite how much time you've spent in the UK. I'm going to answer on your behalf in case it's not. I don't want you to be lynched here on Unlock the Stock. I'm joking. I'll let you answer. It is the Springboks, sir.
Yes, please. There's no doubt about that.
No, wonderful. No, we can keep you then. That's fine. Look, first question, I think, a lot of terminology comes out in this kind of fintech world and people don't always understand it, or they think they understand it, but maybe they don't. I almost want to ask you a very first principles question, which is this concept of a dual-sided ecosystem. I mean, it comes up a lot. It's like at the core of what you guys are doing. Maybe just 2 minutes, just explaining like simple terms, what is that and what is the appeal of it for you?
Sure. So our target market, as I said, is the small and micro merchant who's mainly in the informal economy, along with the consumers in the lower income groups who, I'm going to say broadly, are spending their money shopping in these stores. And so, simply put, we position ourselves to serve that merchant and the consumer across cash and digital, And the dual-sided ecosystem means we can essentially reward and incentivize our merchants, to use our products, and we could do the same for our consumers to come, reward and incentivize them to come into our merchant stores and spend and operate within this ecosystem. So that's the dual-sided, is the fact that our customers are both the merchant and the consumer, and they're operating in the same space. To give you an example, to sort of bring it to life a little bit, we would put one of our financial kiosks in a merchant store. So that would, the attraction to the merchant, when I say incentivizing the merchant, is our customer base will come into their store. So if we put an ATM, we call it an ATM recycler, into one of our merchant stores, they know that our customers will want to come to their store. And so we come with 1.3 million consumers on our customer base who will want to shop in our merchant store. So it's building an ecosystem around supporting both sides, the merchant and the consumer, through financial technology.
Chris, maybe another first principles question as well. I mean, we've had Capital Appreciation on here a while, and big part of their business is the point of sale terminals, and they're trying to add on a few value add services as part of that business. But maybe just give a context of when you talk about the addressable market and your share, who do you kind of compete against, or who are you trying to dislodge? If there is anybody, or is it just more that first time digital adopter? I'm thinking, is it someone like the Peach Payments guys, or M-Pesa, or Capital Appreciation, or Capitec, who have maybe moved up the LSM over the last 10 years, but very much started out at the lower end. So maybe just who you compete against and who you don't compete against, if that makes sense. Just give people a sense of where you sit in the competitive landscape.
Yeah, sure. And let me start maybe with just an example of who we don't compete against in my view. So Capital Appreciation is really not a business that we would say is in our space or competing with us. Simplistically, I look at Capital Appreciation and think, their payments business is largely around distributing hardware, the POS devices in the formal economy. And then they have a software business, which is AWS based. Our customer base in our merchant business is the POS devices that we are placing into the informal economy. So I talked about 75,000 merchants. I'm talking about spaza shops where we put a POS device into their store, and that POS device has our software on there, which think of a platform that allows that merchant to sell various products. We call them VAS, to the customers that come into their store, and they are selling things like airtime and data and prepaid electricity. We're enabling cross-border payments, which is an important aspect of our customer base. So this platform is a tool that the merchant has to sell product to his customer base that come into the spaza. Also, as part of that, we within the ecosystem, we enable our merchants to make payments to their suppliers. And this again is fascinating, so think about, I'll pick an example. You've got an FMCG company, say Coca-Cola, driving around the townships, dropping off Coca-Cola at a spaza shop, crates of Coke at a spaza shop, and the driver being paid in cash. That's the kind of the history. That's what we experience, and the risks around cash, and on our platform, we're enabling that merchant to make a digital payment to Coca-Cola in this example. We've got a whole array of various suppliers, and it's hugely beneficial to the supplier and to the merchant. We're digitizing that process. So we're providing tools and value-added services to a merchant in the micro merchant, mainly in the informal economy, to allow them to then provide services to their customer base. Who do we compete with? In the informal economy, as I said, we're offering a service across VAS, so prepaid electricity, etc. So VAS, card payments, card acceptance, credit, and this cash management smart vault proposition. we don't see a competitor providing all four of those things. We see competitors in parts of those, or in aspects of those. So in the informal economy, I would point to Flash, which is part of Pepcore, or our competitor in VAS. There's a company called Shop to Shop, which would be one of our competitors in terms of supplier payments or card acceptance. And I would say between the two, the Shop to Shop, Flash, and Kazang, we are by far the leaders in the informal space. I think the rest would be somewhat smaller. On our consumer side, where the competitor space sits is you've got the banks without doubt, but the banks are providing a more limited offering, and in particular, the banks are not providing credit into our customer base. The loan sizes are too small, and I think the banks find it difficult to get their head around the credit proposition here. So we're providing a full service across a bank account, access to credit, and insurance for our consumer base. And this is a very real issue, for the grant space. Lack of access to credit means often they're being driven into the unregulated, payday loan space, which, as we know, is fraught with, all sorts of horror stories.
Chris, I'm going to jump in. The one thing in your presentation, you had that great slide on the TAM and the SAM, and it sounds like Dr. Seuss has infiltrated PowerPoint, but it's total addressable market, it's serviceable addressable market. I mean, these are really important terms. I just wanted to understand, it's like a bit of a two-sided question, like your dual-sided ecosystem. So the first one is, how do you get from your TAM to your SAM? What are the characteristics of your serviceable market that you look at, not just the total addressable market? I think you mentioned stuff like taverns, for example. I'm just curious, what do they all have in common? And then the second part of the question is, how do you market to these merchants, to actually get your product in their hands? Because I can imagine it's very, very difficult to reach all these little informal traders and all these types of businesses. Maybe that's half the problem for the banks in servicing this market. You need to get lots and lots and lots and lots of customers doing relatively small volumes each, and it adds up to a big business.
So, yeah, there are two great questions there. So firstly, defining TAM in the informal economy is very, very difficult. There's very little empirical data on this. And we are working with GG Alcock, who we see as the kind of the preeminent sort of thought leader on the market, on the informal market, to improve to get some standardized language, and also to improve the accuracy of the data points around the informal economy. So but to answer your question, I'm going to use some of GG's numbers because I feel they're the most reliable. So GG would say to us that there's in excess of 1 million, 1.1, 1.2, I don't know, merchants in the informal economy, and roughly half of those are what we would call the FMCG, in the FMCG space. And what I mean by that is the spaza shops, the spazarettes, which are larger spazas, hawkers, tabletop traders, roving sellers. We have what we call the bulk breakers, who are going, they go to the cash and carry and break up and into smaller quantums and sell to the spaza. So there are around 600,000 merchants in that space. We would also within that add to that the tavern space. So the Shabin tavern space, we think that's 40, maybe 50,000. So and then you get a whole bunch of other categories that we're just not in. There's a fast food sector, Shizanyama, the taxi space, the auto, the panel beaters, the mechanics. I mean, the salon space is massive. GG will tell you that this is probably one of the highest growth area: beauty products, salons, hair extensions, etc. So there's a whole range of merchants that we're simply not in at this point. So when I talk about a serviceable addressable market, I talk about 400,000. What I'm speaking to are the spazas, the taverns, and some of those tabletop traders. That's probably our market at this point. And we'd like to see growth beyond that, but that's where we focused at the moment, and that's where we've seen tremendous momentum so far. And then your question around how do you access this market, and it's a great one because it's not easy is the short answer. Often these are difficult places to access, sometimes quite daunting places to access. And what we've seen is a lot of the bigger suppliers, FMCG suppliers, want to partner with us to get access to our merchant base. As I said, we've got about 75,000 merchants in the spaza space around the country, and we've acquired those, I'm going to say one by one, by visiting that store. We've got a distribution footprint around the country, a sales force around the country who support these merchants, who have to be responsive, agile, ensure that those devices that we have in their stores are up and working, especially in times like this with load shedding and what we've gone through this year. So it's really about having a footprint around the country to support these merchants and support the tools that we're putting in their stores.
Chris, you mentioned overseas payments there, and we've had data out from the census this week, and I don't think it'd be a surprise to anybody in this call. Zimbabwe tops the list along with a host of other African countries. If you had on one of the slides, I think the 4 countries that you operate in now. If we look out, let's go, 2 to 5 years from now, should we see you operating in more geographies, or is it just that service being added into the, let's say, vast cohort where, I don't know, you're partnering with someone like a Mama Money or someone like that, where that is now built into your point of sale things, and people can send money back to whether it's Lesotho, Mozambique, Zim, whatever it might be. Just on that kind of opportunity more broadly across, let's say, the SADC region, if we just say that.
Yeah, this is an interesting question. So there are just 2 aspects to that to touch on. So firstly, on our platform, in terms of cross-border remittances or payments, we're a facilitator, if you like. So you mentioned Mama Money. Mama Money is on our platform. If you're a customer of Mama Money, you have an account, you can come into one of our merchant stores and make a Mama Money transfer off of our platform. Same with EcoCash, Mukuru, etc. All the big platforms are also, so remittance providers are on our platform, and we're facilitating that through the merchants that we have around the country. So and as you say, that's an important aspect of the dynamic in South Africa. In terms of our own, and we would have just to finish on that, we would have no aspiration to compete with those providers. Just to make that clear, we want to facilitate or give them a platform to operate from. And interestingly enough, we also have the likes of VodaPay and Momo on our platforms. We give them a point of exit and entry into the digital economy. In other words, you can come and top up your VodaPay wallet or withdraw from your wallet off of our platform, just to give you a sense. So we're trying to enable other players and be kind of open in that sense. In terms of international expansion, so what I would say is, yes, we are in Southern Africa. We are in a few of our neighboring countries, and we see some great opportunities there. But I think for now, our focus is we see tremendous opportunity in South Africa, in the informal economy, and growing our business, in our backyard, if you will. We need to earn the rights, maybe is a way of putting it, if I use a rugby analogy, to go wide. We need to do the hard yards first and take it, a full focus on where our business and opportunity currently sits here in South Africa before we maybe move into some of those other geographies. That's probably just a little bit of my own philosophy about life. Yeah.
No, makes sense.
Chris, something I want to ask you, rather, talking about all these different geographies. Load shedding. It just dawned on me now, you're sitting in a township environment where there's no internet fiber, generally speaking. So a lot of these merchants are reliant on the SIM card, connecting to a tower that hopefully has a working backup battery. Just in terms of headwinds to your growth, do you see load shedding as a significant issue in terms of just, cash can change hands without electricity, bluntly. Digital payments and everything else can't. Is that a significant worry for you guys? How do you think about that?
Yeah, another very pertinent question. So our devices, firstly, are dual SIM and they're battery powered. So we have a lot of backup, I suppose, built into the ecosystem to deal with load shedding. And so do our vaults. Actually, we're battery powered and can give us that downtime. That said, so my view is that load shedding level sort of 2, level 3, that kind of thing. I think the country has almost built that into almost business as usual, dare I say it. I think our merchants can operate pretty seamlessly at those sort of levels of load shedding. When we saw, the first half of the year, that sort of more consistent level 5, level 6, that kind of, 8, 10, 12 hours a day, that's when you start really seeing headwinds. And it's more because of actually what you said, things like we started seeing towers going down, access to the telco grid becoming a bit of a challenge. So, if South Africa is going to operate again, on an extended basis at those high levels, those are challenges. I think operating in the level 3, that kind of area, we can deal with that.
Chris, sticking with cell phones, I've got a question in my DMs here. The use of cell phones is kind of part of the payment system. So maybe just talk to a bit about, how people, whether it's on the merchant side, on the consumer side, really access a lot of the products and the stuff right there. I'm guessing they're not logging onto their laptop and logging into online banking. I'm guessing this is very much app, SMS, WhatsApp driven on pretty much on both sides.
Yes. So firstly, on our consumer side, actually, a large part of our offering is USSD based. In other words, on the feature phone, and that's because that's what our market needs and demands. And the second feature of our consumer customer base is it's a high touch space. Our customer base wants assistance. They want to interact with somebody, so we need presence. We've had to be smart. We inherited a branch network that wasn't fit for purpose, and we've moved it to places where our customers want to be. So I talked about creating presence in the merchant store or right near the merchant store, so that we can provide a degree of direct service to our customer base. So that's on the consumer side. On the merchant side, so again, cash is still. I talked about 90% of transactions are still in cash. We're going to start releasing some numbers on this digitalization journey, but it's definitely the trend is starting to pick up strongly around card and digital adoption, but it's still coming from a very, very low base. So most of what we're seeing is a customer coming into a merchant store and interacting with the merchant in that store. We do have app functionality, etc., but it's relatively small in the journey, or early in the journey rather, at this point.
Chris, I've gotten a question here in my DMs about the provision of grants. Just some idea around sort of what percentage of revenue and earnings you derive from that, and is that for for a fixed period? Is that something that's expected to continue? Just a bit of an understanding around that. There's clearly questions around that.
Yeah, so just maybe to clarify, just to make sure I'm understanding. So our customer base, our 1.3 million consumers, they have, I suppose, selected us as their banking partner, if you will, and have instructed SASSA to pay their grant into their bank account with us. That's the way to think about it. So we're a financial provider a service provider to 1.3 million people whose grants are coming into their bank accounts with us. The 12 million grant recipients, permanent grant recipients in the country, approximately half of that, just under around 5.7, I think, are still with the post bank, the post office, and the rest have moved in some way to a bank. And that's the sort of the macro trend here that's actually playing out when we all see what's going on at the post office. SASA is encouraging and facilitating the grant base to open a bank account. Giving people a choice to open a bank account wherever they like, whether it's with us, with Capitec, whoever it might be, and have their grant paid into that account. And that's then how we start to build a service to their customer. Off the back of knowing that there's a constant income stream coming into the customer's account, we can then start to offer them other services off the back of that and build a relationship.
Chris, maybe this is more of a historical one or first principles one. I mean, you guys are dual listed in the US as well with the NASDAQ listing. Maybe, just the thinking behind that, given, the current market cap, I think it 4.7, if I do my maths right, billion rand, that's like 250 odd million. There's obviously, double the kind of costs. You have JSE listing to maintain and NASDAQ listing to maintain. The thinking about having that and the purpose it's serving.
Yes, that's another question we do get often. So, look, I think for us, the NASDAQ listing is incredibly valuable. It's access to global capital. I talked about building a fintech platform, and that platform is going to, is a platform to grow, to maybe to consolidate and to acquire and to build the leading platform in South Africa in our space. And we believe the NASDAQ gives us access to capital, pools of capital that will drive that. There's an investor base out there, that look at the stories that are, the case studies that I was referring to earlier, the PAG Seguros, the Faris and other markets. They've seen it play out, and they're familiar with it, and they're looking for similar in other parts. There's the impact investor space also, who look at South Africa, emerging economies, look at financial inclusion. We have the IFC as a shareholder, for example. One of our largest shareholders is the IFC. So the NASDAQ is important to us in terms of access to capital and a platform for growth. And I probably should say, we also, the Connect Group was a large acquisition. It was transformational, and we closed just over a year ago. We believe that's going to drive and is driving good organic growth in our business. But equally, M&A and further acquisitions are important as we try to scale and quickly build a leading presence in the country.
Chris, last one from me for today. Just those non-core assets. I mean, I think that's a nice way to just lead into that a little bit in terms of, the capital available to you and how you maybe, unlock some more money for the M&A, which you've certainly done a lot of in your career. Just in terms of non-core, like what's in there? Could we just spend 2 minutes, high level, just to help people understand?
There are really two things. One is an investment in Finbond, which you may have seen. Finbond have released a share repurchase announcement. So we've agreed in principle to sell our shareholding back to Finbond through a repurchase agreement. It's subject to final shareholder approval, which I think is due in November. That's around 70 million rand, so it's relatively small in that overall number. The biggest piece of it is an investment in a company called MobiKwik, which is an Indian fintech. We hold a 10% stake in MobiKwik. It's on our balance sheet at around $75 million, which is based on a valuation of their last cap raise in, I think, October 21. Some big shareholders in there, the likes of Sequoia. And we see it as non-core for us. It was a position that Net1 or an investment that Net1 made before we came in, and strategically, our focus is building the platform in South Africa that I've been talking about, and we've been saying to the market that at the right time and the right opportunity, we will look to exit MobiKwik. Their sort of communication is around an IPO of their business in the second half of next year as the most as what they're focusing on for an exit. So, for us, there's an opportunity to redeploy those funds in our business for growth, and also for some debt reduction as well to some extent. So, yeah, it's important to highlight it.
Chris, one final one for me, and if we keep to the two-sided theme, M&A on the other side, in terms of, you know, acquisitions that you're kind of looking to making, is it, you know, on the consumer side? Is it on the, you know, on the business side? You know, something to get you a bit more traction in the formal market, or, you know, stuff that can, you know, help you, you know, get more into the informal market and really cement your position as the like dominant player in the informal space. So yeah, just maybe talk to us again, like high level, about, you know, where are areas you're kind of interested in on the other side of the M&A coin.
Yep. So what I'd say is our M&A focus is almost fully on the merchant space and not on the consumer space. We think that the opportunity to grow organically in the consumer space is there, particularly you know, with what we're seeing in the market. And I touched on the post office and the like. So on the merchant side, we have two big sort of strategic themes that we're focusing on. One is around adding scale, which really means acquiring possibly smaller players in the market, acquiring their book of merchants, bringing them onto our platform and building scale in that way. And there's a secondary aspect to this, which is there are opportunities to potentially acquire, I'm going to call them single product providers. You know, there might be a VAS provider, for example, and then start to layer in some of the other things we do, for example, card. So there's a double, you know, whammy to it in a sense. And then the second theme that we're very focused on in the merchant business is around building on our proposition, building and, you know, on our offering to that merchant, deepening our relationship with those merchants. You know, I talked about supplier payments. That was a natural innovation over and above our VAS business. Card was the same thing. We started with VAS, we rolled card out, you know, 18 months ago. We see, for example, our FMCG partners, the big suppliers, they're interested to know what's going on in these merchant stores. You know, they want data. How do we monetize that? How do we share that? So it's ways of embedding ourselves in the merchant's life, and solving more of their pain points ultimately. Those are the two themes that we're constantly on the lookout for.
We are pushing up on time, Chris, so I'm just going to hand back over to Deborah, who's just going to wrap up with some important information for our audience. Deborah, back to you.
Thanks, everyone, and thank you for the Q&A. I think there was some valuable information in that, and I just want to apologize quickly. And just, you'll see on your screen now the updated email address if you want to be on the LSAK Technologies database. And so there it is for you. And then I just want to jump on and say thanks, everybody, for participating in Unlock the Stock today. And a special thank you to Chris for sharing all this information with the investors that have dialed into today's call. If you've enjoyed it and if you would like to see it again, it will be on our Unlock the Stock YouTube channel soon. So we encourage you to subscribe to that channel so you can get all the latest updates. Just a quick thing too is that we'll be welcoming back to LSAK Technologies on the 23rd of November to chat to us a little bit more about some other stuff that they're up to, and we really do look forward to that. And then my final thing is just to join us next week for Unlock the Stock, the 19th of October, which will be featuring Calbo M3 and Bell Equipment. We'll both be returning to the platform, so please do look out for the invitation. I think I've covered everything off, and I'm delighted to say it's finally raining in Johannesburg. Thank you, Cape Town. I think you've all had enough of the rain and for sending it back to Josie. And that's it. Thank you. Bye-bye.